a great segue, really, from what we're talking about now to the overall market. I don't know if you just noticed, NASDAQ's back over 11,000. It's going for its first ever close above that level. Jethro, what do you think about, when you look at where tech has come to, it's pretty remarkable, powered by Amazon and Apple. Is it just going to keep going?
I mean, you're right. I mean, it's been quite the liquidity-fueled boom and prices overall in the market, specifically technology stocks. Certainly fueled by the stimulus that we've been getting and record amounts, low interest rates, which according to Economics 101, you do a DCF valuation tends to inflate asset prices. I mean, at these levels, I mean, it's these are certainly historical times, so we look at things in a historical context where the valuations are certainly quite high. And at these levels, I think you got to be more selective. We become a little bit more cautious here. Certainly things could stay lofted up for some time, just given the Fed's given a backstop to the markets. But we think that we're probably going to be facing a increasing period of volatility due to seasonality factors as well as the political environment. So we're increasingly more cautious at these levels.
Jethro, when you look at this, the stock's up 300% over the past 3 months, and that's before today. And Fastly's pulling back hard. You made the stock's down 20%, just about. You made a new buy in a name Cloudflare, which competes directly with this. You can tell me about that in a second. But just this notion of as the bar continues to get higher and higher, the more difficult it becomes for some of these companies to live up to that hype, if you will.
Yeah, I mean, that certainly is a risk, which is something I certainly alluded to earlier, just given the liftoff that we've seen in stocks. You've got to think about taking some of the chips off the table and some of these names that have done well. I mean, certainly with regards to Fastly, it's a very high growth company that sports a very high multiple as well. So I think you have to look at some of these names that are high growth that are also geared to some pretty powerful secular themes. But you have to have some patience and be prepared to kind of nibble at these names as they sell off and come to kind of more attractive levels. There's been things written in terms of where we are with regards to the yield curve, steepening, and the value versus growth argument. I mean, clearly, growth has had a significant outperformance relative to value, and the spreads are now at historic levels, which has sort of been talked about before. And again, within tech, there's always going to be names that are geared to some of these powerful themes that are going to present some opportunities during these sell-offs. And certainly in the case of Fastly, it's probably a sell-off that was long overdue. But look to kind of be more constructive at cheaper valuations.
Tell me about this new buy, as I mentioned, of Cloudflare.
Yeah. So again, in terms of some of these names that are geared to some of these powerful secular themes, we've been accumulating Cloudflare. We were buying it, in the 20s and early 30s into Q1 and Q2. It has high exposure to some of the secular tailwinds. Think about cloud security, internet content delivery, and firewall protection. The company does report tonight, so that there's going to be some high volatility there. If there's some volatility to the downside, we probably look to nibble at the stocks some more.
LiveRamp Holdings, which I don't think we've ever frankly talked about on this program. It's another new one on your list. Tell me about that.
Yeah, LiveRamp Holdings is an enterprise SaaS company that offers one of the best customer data management platforms for commercial marketing campaigns. It has a significant addressable market. The company's been benefiting from this secular wave of, think about outcome-based marketing and advertising and being measurable in terms of ROI. The company is also a third-party customer data provider, and a lot of the customers' data is anonymous, which makes it an attractive alternative for some of the partners, like where it doesn't compete.
I'm coming up next, though.